Late last week, the Dow gave up the ghost. We saw a hanging man signal in the overbought condition, which told us two things are going to happen. Either if they open it positive, they were taking it out into new territory. If they open it negative, they were confirming a hanging man signal that told us that they'd peaked out. When they did peak out, it was right at the same level it topped out before. Thursday, we had a close back down toward the T-line, the 8 exponential moving average. A very strong indicator for telling you when a uptrend is in progress or when there's been a reversal. Friday, we obviously saw there was no buying on the open. Took us down below the T-line, which now tells us we're in a downtrend. This may mean that we're in a sideways mode here for quite a while. You can see there's an obvious support level right at this range, which tells us we could be coming back down to this level, which would indicate that you want to be short for probably the next week or two. That same analysis can be applied to the NASDAQ, where we had a shooting star. We tried to come back up and then had a bearish engulfing signal that closed back below the T-line, followed by a gap down. So the strength in the market that was being created by the island reversal down here fizzled out. Now we've got an island reversal that could be going the other way. The failure of the 50-day moving average area should make the next target the 200-day moving average, also implying that we're going to be in a downtrend for the next couple of weeks. This would imply that you want to be long most of your positions, but there's still, you want to be short most of your positions, but there are still longs that are very viable in this market. AWH, a recent recommendation at the Candlestick Forum, showed us where there was a breakout, and the bullish follow-through is disregarding what the general market is doing. That's a characteristic of a candlestick pattern, that the information built into that pattern is overriding what the general market conditions are. And our recent recommendation on DGI was based upon a simple pattern of a doji followed by a gap up, the strongest of all your bullish patterns or signals. Backed off a little bit today, but right back to our 3T line, which is another indicator or a trend indicator. So we've got some very good profits in this one, despite the fact the market was selling off. The analysis of candlestick signals provides the candlestick investor with trading information that they do not get from other charting techniques. The candlestick signals show you where the strength or the weakness is coming into a market. That'll be it. We'll see you in the chat rooms.